Can you lose your home with a reverse mortgage? The short answer to that is yes, but let's talk about how you avoid that. Hi, my name is Tara. I help Utah and Idaho homeowners or potential homeowners with all your financing needs. Today we're going to talk about how you can, if you can lose your home with a reverse mortgage. The short answer to that is yes, it's actually pretty hard to do, but just like with any loan, you are agreeing to certain terms and conditions and obligations for the lender giving you that money. So like a traditional loan, the main requirement of keeping the home while you are paying back the loan is that you make monthly payments. The reverse mortgage does not require that. So what are the requirements so you can stay in the home? Number one, probably most important one, the number one thing is you have to occupy it as your primary residence. So that doesn't mean you can't own other property. You could totally have a vacation home somewhere else. That is all allowed, but the home with the reverse mortgage does have to be your main primary residence that you live in majority of the year. And then it's very simple. You're required to pay your property taxes, homeowner's insurance, HOA dues if you have those, and maintain the property. So you have to maintain it to a livable condition. So those are really the basics. If you can meet all of those requirements, and they don't care what your loan balance becomes, they don't care how long you live there, your loan balance could be 3 times what the house is worth, you get to stay there as long as you live in it, maintain it, pay your other bills associated with the house. So it's pretty simple. The thing where people get caught on these is if they no longer live in the home. So say you get sick or you have an injury and you have to go to a nursing home, that becomes more of a permanent situation. Once you no longer occupy the home, then they could call the loan due. So you have plenty of time to deal with that. They do not want to foreclose on you. However, they can. But if you want to get a reverse mortgage, you definitely want to have a plan on what happens to the property if something happens to you and you can't occupy it any longer. That also becomes the case if you just move. You don't want that to become your primary residence anymore, but say you want to keep the home. If the home is no longer your primary residence anymore, they can call the loan due, which means you have to pay off that balance by either selling the home, refinancing the loan, paying cash. There's multiple ways you can pay off the loan balance, but you do want to have a plan if your plan is not for this house to be your permanent residence for the rest of your life, or if something happens and you can no longer occupy the home. If you pass away, that's also another case of just fitting into that box that you're no longer occupying the home any longer, and your estate will have to sell the property or pay off the loan balance. And again, make sure you have enough money to pay your taxes, insurance, HOA dues. A lot of times people recommend having 4 to 6 months of that amount saved up just so you can make those payments when they come. So how do you protect yourself from these things? Obviously, make sure you are keeping the home in good repair. Make sure those regular maintenance things are taken care of. Keep a savings account for taxes, insurance, and repairs, unexpected repairs. Make sure you have enough money to pay for those. Make sure you have a plan for end of life and for injury or illness. It's very simple to meet the requirements of a reverse mortgage. So hopefully that alleviates some concern about these. They are really meant for you to be able to stay in your home long term and not have to worry about the cost of what that payment is and money for that. If you have questions, want more info on how this works, check out my other videos or subscribe. Thanks.